Welcome to Impact Tech Studios, where we explore the minds shaping business, investment, and impact. Today, we are joined by Manu Kohli, an investor, professor, and former global business leader with over 2 decades of corporate experience across finance, consulting, and energy. From building large businesses at scale to transitioning into teaching and angel investing, Manu's journey reflects how experience turns into insight. In this episode, he shares his views on investing, building long-term wealth, and what truly matters when backing startups and companies. Let's dive in. Yes, hi Manu, how are you?
Hi, how are you? Fine, thank you.
It's a pleasure to have you on our podcast. So I'll tell you the basics of this podcast. So I'll keep it simple and as you've asked for. So it will
Yeah.
be session. It will not be an interview, obviously. So I represent ImpactX Media. This platform is basically created to become an extended understanding of how an investor or a startup should look for building something in impact, right?
Okay.
So majorly our customers or basically audience is investors, ecosystem holders, startups, and people who are basically trying to build something or adding some value to the value chain of impact, right?
Okay.
So this is where we stand. We started as a media platform. We through this media platform we ended up investing into startups as well, because once you have them on the platform, people start to judge their psychographics, demographics, and everything, and the way they talk and the way their confidence is. So that becomes a validation addition to their pitch. So then it tends to go into that direction of understanding if it is a good startup to invest into. So this is our story, right? And would love to know your story and understand where you come from, and what all have you done in your investment thesis. What do you do in your professor, as you are a professor in the university, which is a very good university for business. So I would like you to open it up, right? And apart from that, you also have interests in an experience of building large businesses at scale, where you have helped them to reach markets and create their presence in there through deals which are very valuable for the larger organizations as well. So welcome Manu, welcome to the podcast, and we are going to have a very nice conversation about you and us and how can we add value to each other, or maybe just
Sure.
chat together.
Sure. No, thanks. Thanks for inviting me, Arjun. It's always a pleasure to chat with like-minded people. Also, kind of if I can share my experience over the last 2, 3 decades, and if
Right.
can help in any which way anyone who's either trying to build a business or just trying to help society in a wider sense. I think that's a big achievement. I will count it as a big achievement for myself rather than just amassing a lot of wealth or making
Right.
just about just making money. I can help, and that was one of the big reason that I chose. After almost 25 years of my corporate career, I chose to start teaching because I felt that this is one way of giving back to the society in the most kind of little way
Mm.
I can. Uh, so that's why I kind of made a shift from my corporate life to teaching. Yeah. Other than that, I always had a passion to teach. I used to teach even when I just passed out of my AB school.
Mm.
I during my free time, I used to teach students to prepare for CAT.
Right.
So I always had that passion in me, but somehow during, in a large organization, corporate lifestyle, it becomes quite challenging to kind of find time to do so.
Correct.
I thought maybe once I hang up my boots
Mm.
from that kind of my career, maybe that's the good time for me to kind of look back at giving back and teaching. So let me start maybe from the very beginning, which
Yeah.
is maybe 45, 50 years ago.
Correct.
Not bore you from those kindergarten, school or stuff, but yeah, I come from a business family, stayed in maybe what, almost 18 years of my life. I stayed in a very small town called Muradabad, which is about 150 odd kilometers north of Delhi.
Mm.
The town is famous for brass, probably world famous for brass. In fact, like probably 70-80% of the brass in the world is
Mm.
produced in Moradabad, very small town.
Right.
And because it's a business town, so my family had a business,
Mm.
and uh, at kind of at the back of the mind, we always had that thing. Okay, चलो कुछ नहीं है, business है, we can always get back to our business.
Mm.
And yes, there is a family business. We've been doing it for last whatever 50 odd years,
Right.
and we can always get back to it. But somehow my father always had that thought process that you should get education first, and more so because he himself was not had a large or a longer kind of continuous formal education. In fact, none of my family member or my father's side of family, because they were businessmen. So, and so education was probably the last of their priorities.
Mm.
But my father somehow was a like a path breaker in that sense. And they said, Ki, I have a younger brother as well, that both of you should study.
Mm.
And then, okay, if you don't want to do a job, then you can always come back to business. But I would want you to study. And he had some health issues for which we had to shift our base from Moradabad to Delhi.
Right.
And there, then, like a proverbial small fish in a very, very, very large pond,
Mm.
you have to grapple with a lot of stuff. And one of that was, what do I do next from an education standpoint?
Right.
And with no guidance at home, um, I thought that like let's do engineering because it's a safe bet.
Mm.
Tried for it, but because didn't prepare enough, so I couldn't get through the best of colleges. And then did my diploma in mechanical engineering. Again, no guidance, so I thought maybe it's an easier way to do or get into engineering. But later realized it is not equivalent to an engineering degree. You
Mm.
have to do something to improve it.
Mm.
Uh, Worked for a few years after my diploma, mostly in engineering project management roles.
Mm.
And then again, business family said, "Oh, why don't you get married now?
Mm.
It's high time. You're getting 26, 27 years of age. Why don't you get
Right.
married?"
Right.
I said, "It's too early. Maybe give me one more year, and I want to do an MBA. Let me try and get my MBA done,
Right.
and after that, just give me a year, let me prepare." But then that time I was very clear that if now I have to do any further education, I would do it from the best colleges available
Mm.
where I can get through. And
Mm.
that's when I took my CAT, got through almost all IIMs. That time there were only six of them. You
Right.
know, so got through, finally chose
Mm.
to attend IIM Calcutta.
Right.
Um, and then from there on started my corporate journey, which extended to almost 20 odd years,
Mm.
from corporate finance to consulting, investment banking, and then with a very, very large oil and gas company called BP, British Petroleum,
Right.
where I spent more than two-thirds of my career, worked there for 16 years.
Right.
Different businesses, different roles, different geographies. Um, and then the last role where I was doing business development or leading businesses, global businesses in the field of petrochemicals.
Mm.
And that year, and I think that was COVID year 2021, BP decided to sell off that business globally. So
Okay.
all of works were moved to a company called Ineos,
Right.
where I worked for a year, but
Mm.
somehow kind of didn't like the you can say organization culture or whatever kind of
Right.
they fit to my what I had
Mhm.
thoughts for my career. So I decided to give it a go.
Mm.
Left corporate, and then I thought, what next? So
Mm.
started a venture of my own in the mobility space, electric mobility space,
Amazing.
which is still running. I am no longer operationally involved. I am still a shareholder in that company,
Right.
which got merged with another friend's company. So now we are integrated logistics provider by the name Glass Wings, which
Okay.
does end to end logistics from first mile to last mile. My company was focused only towards last mile, using only electric vehicles. But now we do everything from last mile to even rail. So we've just started doing rail now. So I do transportation using rails. And about 2.5 years ago, I formally started teaching at a B school,
Right.
and that's what I do now.
Right.
Half of my time is spent in teaching, and the rest half I do a bit of angel investing. I do a lot of stock market investing, which is primary investments,
Mm.
and do a bit of consulting here and there because I have a lot of corporate experience,
Right.
especially in energy, and so I do a bit of consulting on the side in energy sector as well.
Mm.
That's kind of slightly longish, but that's what my
No, that's a very nice
career.
journey. So it is coming from a background where just the simple thinking of you should get educated has led to a journey which has given you amazing experience of studying at IIM Calcutta, and going from that angle to this is an achievement for a family and a generation that changes with it, right?
Yeah, yeah, no, I agree.
And then beyond that, you have just chosen your path because you can, and you have chosen to be in a university as a teacher, and the university is also Lal Bahadur Shastri Institute of Management. So it's not a,
Yes.
it's a known university across North where people, the number of people who apply and the number of people who get in is a good thing that is there. So the kind of students you are teaching is also very respectful. So that's an amazing thing. And you are giving them knowledge in terms of consultancy, and you are doing investing also. So I settled on investing, and I wanted to know how you look at your investments and how do you do it. So what are your thesis? What do you like to invest in? What do you do? What is your emotional connect to a startup when you're doing it, and the maths behind it? How do you look at it?
Okay. So I do two kinds of investment. One is startup, as you mentioned, angel investing.
Right.
That I don't do kind of like a full time role. I do it through some friends. So there is a senior of mine who runs a angel fund called Angel Bay, and that's through that fund that we do startup investing. So
Right.
he and his team does most of the, what do I say, legwork, and then they pitch ideas to a host of investors like us. And then they say, okay, this is the kind of investment that we are looking at. This is the kind of startup or the company that we are trying to invest in. Will you be interested in investing such a company? Apart from providing money, I also, because I have a lot of corporate experience, I also kind of help the founders in terms of how to look at one, maybe scaling up, but also look at finding solutions to problems which may initially seem complex. So
Right.
I've built large businesses, I've built businesses globally. So I think that helps me um, help them kind of solve some of the problem, if not all.
Right, right, right. So when you say you're part of the Angel Bay investment group, so is this an AIF one or something like an that kind of a fund?
Yes, yes, it is. It is an AIF category fund.
Right.
It started off with more like a, I'd say loosely held association of friends who wanted to invest somewhere.
Right.
But then, because once we started investing more, I think over the last maybe 4 years or so, we have invested in close to about 70 odd startups
Right.
in different areas, different fields.
Right.
So it made sense to do it more structured way. So it's an AIF fund category fund now. So that's how we invest. So we pool in money at the fund level, and then the fund
Yes.
decides
Did it,
to, yes. And but we also have a flexibility sometimes, not always, to kind of co-invest as well. So the fund invests, but if I like a particular investment more, then I can invest on top of what the fund is invested. So I could be an individual investor as well.
Right.
So that's the flexibility that we have.
Right.
Apart from that, I do a lot of, so that takes probably half of my kind of working time, is I do a lot of primary investing, which is investing in stock market.
Stock market. Yes.
There, yes, I can maybe detail out on what my investment thesis look like. How do I look at
Right.
stock? Do
Right.
I
Right.
invest?
Right. So would love to know. So how do you do the stock market understanding? How do you look at your, are you doing it on your own, or are you working through and through a wealth manager, or are you doing it on your own overall? How you
So
divide your
overall,
portfolio? What is your portfolio, first of all, on the stock market, and how are you dividing it over the way of percentages of how do you structure that portfolio in terms of the investments that you've done? Yeah.
sure. So I'd say about 20% of my portfolio is what we call, I can say that's passive investment, which is I use mutual funds to invest my money. I used to do it more actively, active in sense, till about 5 years ago, almost 80% of all my investment was through mutual fund,
Mm.
because that time I didn't have time to monitor the market on our daily or whatever weekly basis and not be heavily involved. So that time I used to do more through mutual fund. But over the last 5 years or so, almost now 70-80% of my portfolio is direct stock investing.
Right.
Uh, and where I predominantly, I'm more a fundamental investor than a technical one. I do look at some technical charts as well,
Right.
but that is more from a entry exit standpoint rather than. So I don't do a lot of momentum investing. I mostly do fundamental investing. So I
Right.
look at a company, do research, uh, study about the company, look at balance sheets, all the financial
Mm.
statements,
Mm.
then take a call.
Mm.
And because I am at that stage, if I can, I'm getting old now. So for me, wealth protection is more important than just getting returns. So
Right.
my portfolio is probably skewed still towards blue chips or what I call large cap
Right.
stocks.
Right.
I'd say about 50-60% of my portfolio is still kind of large cap blue chip funds or blue chip companies. And the balance, I'd say about 30 odd percent is mid cap, small cap, and 10% is commodities, which
Right.
in the hindsight definitely has helped me in the last couple of years because of the run in silver and gold. But yes, I always had that thing of more gold, less
Mm.
silver.
Yeah.
But now I think should have been more silver. It's good. But
That's
yeah,
true, but yeah, it is my opinion about it. My fundamental understanding of gold and silver and how the journey is till the turmoil is there, this will go up and down and then correct
yeah,
itself back to the
yeah,
same thing.
yeah, yes.
Which
But
was
at least gold is a more, I feel, and historically also gold is a slightly more safer bet than silver is because it does not have that kind of volatility. It does not kind of draw down to such extremes that silver you will see. So
right.
gold will have a probably a longer term, safer return than silver will have.
And the protection for silver is also because of the current technological scenario where you are saying that the chip is being made with silver.
Yes,
And that
chips,
develop,
batteries, a lot of other
yeah,
electronic
but
circuitry. So
technology development is going to go real fast now. So
yes,
you can't
yes,
depend on that kind of information that it is going to be the market.
yes, yes, yes. Yes, yes. Sometimes you do, even if after spending so much time
Mm.
looking at markets, investing, I would lie if I say you don't get a FOMO or oh, I should have invested more in silver. I think every investor would think about it.
Right.
But again, as a fundamental investor, I think I feel gold is a much safer bet than
Right.
silver.
Right. 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 That is true. And the news about innovations in gold have just trickled in a little bit.
Yes,
Like
yes.
somebody has created some alloy out of gold also and then put it into a place where you can create it in a lab or something.
I think,
Yeah,
yeah, I think
conversation will always be there. It is always about balancing it out, right?
it is.
Deal. Hmm. So let's go back to fundamental. So let's go back to fundamentals. I'm really interested in your fundamentals and how do you look at a profit and loss sheet and balance sheet?
Mm.
How do you look at? Do you look at updates, monthly updates that these filings that they do? Do you look at the filings of the companies or not?
Not monthly updates, but yes, I do look at the quarterly results. Most of the large caps will are bound to kind of give quarterly results and do
Right.
come out with quarterly outlooks. So
Right.
I do look at them. But before I kind of get into that stock, the thesis again is people have a lot of view, a lot of kind of, and I'm not saying that my way is the best way to look at it. Each fundamental investor will also have its own way of looking at like looking at a particular investment.
Right.
For me, I look at two or three key components of investing in a particular company or a stock.
Right.
Uh, One definitely is how strong they are in the market that they operate in. So they have to be in the top two or three. So they have to be the top two or three players, and by nature, because they are large caps, they will be in that category. So they will be the top two or three companies in which they operate in. That is there. Look at uh, uh, I look at rather than profitability, which is PAT or PAT margins, or
Right.
I rather look at EBITDA margins, because that I think is a more sound, at least from my viewpoint, more sound way of looking at a business, because then you are looking at things which are, if you, like, for example, if I have a company XYZ who generates a 40% EBITDA margin, just going random numbers, versus a company who generates only 20% EBITDA margin, but company A, which is generating 40% EBITDA margin, maybe for whatever reason, predominantly because of capital structure and taxation, may have 10% profit margin, whereas company Y, which has 20% EBITDA, may have 15% profit margin.
Correct.
But I will still go for a company which is company A, because it creates much more value in areas which are beyond his control, because EBITDA is things which you are generating because of the market.
Yes.
Yeah, because all the things below EBITDA are things which you control, whether it is taxation or interest or depreciation is something you control, you can influence. Whereas EBITDA is something which is dependent on the market. If the higher the EBITDA margin, I feel the better the company is. But consistently, it should be doing. Um, I somehow am not kind of enamored by dividend per se.
Right. Right.
I do keep some companies which are good dividend paying.
Right.
Maybe you can look at it as proxies for uh, like debt investing in some sort of way. So companies which are, and most of these are PSUs, companies which pay good dividend, they are bound to pay that. So you look at them as also like a quasi debt investment.
Right.
It gives you maybe 7-8%, 6-7% dividend. But my primary thesis is not looking at dividend from when I look at investing in a company. That's more like maybe out of 60% of my large cap, maybe 5-10% will be 10% will be like dividend paying stocks, which again for me, I look at it as a debt investment, because I don't do a lot of debt, hardly any debt. I don't do any, in fact, almost negligible debt.
Right. 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 So, if I may ask, what is your portfolio looking like? So, what is the companies in large cap that you have invested in, which you think are the stars in your portfolio? Yes.
So the companies which have consistently delivered for me are SBI, State Bank of India,
Right.
Airtel, ITC, then this Indigo. I have really liked it, and I continue to like it despite of all the challenges that it faced in the last quarter or so.
Right.
Still, I think operationally, it is probably one of the best airlines in the world and would continue to do so. Then I also I read a book. I'm forgetting the name of the book. This was about a hedge fund guy who only operates on what we call event-driven strategies. Yeah. So event-driven strategies means if there is an M&A coming up, or if there is split coming up, or a bonus coming up. So I also look at always on the lookout of companies which are either announcing splits or bonuses or mergers acquisition. And if the company is fundamentally good, I think it is bound to create multiple time value going in the future. And one good example, which I can pat my back, is Shriram Finance.
Right.
So I bought it at maybe whatever it is quoted today at half the price when they decided to kind of give a bonus and a split.
Right.
And that has given me almost 100% return in less than a year. So I
Hmm.
do look at such opportunities as well. And one another bet I'm making this time is on Vedanta, which I think is again well split up in the next maybe, I don't know, 6, 8 months, split into. They've already got board approval and SEBI approval to split into 6, 7 companies. So I
Right.
think will probably create good value down the future. I keep buying it in smaller chunks. I don't do like bulk buying. And that's again one of my again my way of kind of investing. If I like something, I don't buy everything today. So if I've allocated or I want to allocate, say,
Hmm.
10 rupees for that company, I
Hmm.
won't spend all 10 today.
Right.
I will do it in tranches. If the price looks good to me, maybe I'll spend 40% of it right now and the
Hmm.
balance 60% in the next maybe 2 or 3 tranches.
Hmm.
Sometimes it works, sometimes it doesn't. It might go up, so it doesn't work sometimes.
Hmm.
But yeah, I think most of the time it works. And then even while selling, I try and do something like this.
Hmm.
If I get to my kind of exit price, um, I'd probably sell maybe 60% of it and still retain some 30, 40%, which maybe if it goes up, sell again. Or if it goes down further, maybe I'll buy it again. So that's
Right.
how I look at.
Right. Right. So that is the margin that you're looking for to exit is like 30 to 40% if it is giving me above what I was supposed to have in this year or at this time, I'm okay to just sell it, right? At
Yeah.
the yeah.
So I don't always have a fixed kind of target. So I don't set a target that if you give me 30%, I'll exit, because not all companies will give you 30%, especially not large gaps
Correct.
in shorter periods
Correct.
of
Correct.
time.
Correct. Correct.
But that's where some bit of whatever limited technical knowledge I have,
Hmm.
I look at that and then look at kind of what RSIs and a few other parameters are telling me this is the right time to kind of partially exit and do it.
Hmm.
Then maybe buy again on them. But
So
yeah,
if I were to if I were to say that stock market investor like you who's really interested and he's showing his eyes are lighting up when he talks about his portfolio and there's bare in his eyes that he likes that thing and he knows that this is the way I know that it is my way of doing my investments.
Mhm.
Um, what do you think out of these can be applied to private equity? Anything that you think can you think openly about? Because I come from the private equity side. I am
Understood.
more
Yeah.
from the stock market side. So
Mhm,
we
mhm.
majorly find parallels in different ways of looking at a fundamental of a startup, right, and a fundamental of a pre-seed investment, right?
Sure.
So what do you think? Let's have a oh happy discussion about whatever mistakes we make it in the video, right? So,
No, no, yeah, yeah, no, I
what
agree.
are your
It's
yeah?
better.
What are some parallels that you think would be great for a early startup which is looking to raise around 4 to 5 CR for
Mhm,
their
mhm,
investment as a round? And what
mhm.
do you think will be valuable from your learnings from stock market?
I think at that level, there's not much financial history that you can look at for sure. Then I would probably bet on mostly two things. One is the promoter in terms of how or what they have done in their previous avatars.
Mm.
What kind of people do say a lot of time that pedigree is not important, but I still feel I think pedigree at some level is very important, and
Yeah.
not because of just the brain power, but more from a networking effect. I think because if you come from a particular kind of brand of kind of institutions, I think it always helps to
Mm.
open the right kind of doors. I think it's easier to get businesses, easier to raise fund, easier to kind of get the doors open. Whether you're able to complete it or not, it also again depends on your capability, but at least you will be able to open a lot of doors if
Right.
you have that kind
Right.
of
Right.
pedigree. that helps. The other thing that I want to look at is I still am that kind of conventional bent of mind is when is it that they will start looking at making real money? Yeah,
Yeah.
difficult to say always, but I don't just look at growth, astronomical growth at burning a lot of cash. I think
Right.
anybody can, if you give me $50 million, I can grow at whatever pace you want me to grow. Yeah.
Right.
Easier to do that stuff.
Right.
But at least if they're thought through, okay, it may not be achievable in the next even 2, 3 years, but at least if they have a clear path on what they want to achieve at what kind of level, I think that is very important. And somehow I feel companies which don't have even what do you call unit level economics,
Correct.
somehow I feel quite
Correct.
kind of
Right.
I generally will pass it on. I can't somehow I don't have that kind of trading or
The
whatever
appetite to do it,
conscious
obviously.
appetite to
Obviously. Yeah.
it.
To take that kind of a risk where
Yes.
basically the guy is not showing you that is unit costings plus the so for example, if there is one project that they are working on, so the cost benefit of that project should show you that the profit and loss statement after for that project will be a
Believe.
different project profit and loss statement with the margins already coming in. So unit economics is great for you at
Yeah.
the project level. If you're not able to do that, then obviously it does not make sense for investing because they don't know how to run a project. How will they maximize that and scale that up into a product?
Yeah.
Right.
Yeah.
Right.
All right.
Okay.
Yes.
Okay. Okay. So, two of my investments that I did in private equity, I'll open up. So, one is Jaipur Watch Company, which is
Oh, okay.
the Indian watch company, which is
But I'm quite aware. I'm quite aware of Japan.
right. So, in the beginning itself, he was one of our podcast.
Oh, okay.
We, I really like the product that somebody is making a watch with Indian ethologies
Yes.
and those things in India. So, he has grown leaps and bounds because he comes from the traditional business, how to run a business, standardize the business, and make some profits. He's CA by profession. So that way, he was an amazing guy, right? To
Mm.
invest in. Plus, this profit and loss statement was always good because he was coming after 9 years of experience in his startup.
Mm-hmm.
So he had already sold some watches. He had already reached to Narendra Modi and all those people and given them that gift of watch to so that the marketing starts happening for him. So now he has stores across India and he's opening up in Dubai and all those things. So he's gone to the second round with a very stable way of looking at funding, which is what the unit economics, the way you are saying unit economics, that is what he's already achieving.
Achieving.
The second one is Renew Cred, which is carbon credits market is another market that is coming up, which might be put into box of you will call it commodity trading kind of in carbon credits, right? Similar
Mm-hmm.
to that, I think it will work that way. The markets will trade on carbon credits, which has already been a sound announced by the government also that they're coming up with a formal carbon credit market. So he basically is a scientific approach to measure all carbon credits and create and get certified those carbon credits to be aligned with all the government associations so that you can get the carbon credits to be traded in markets either in India or abroad. So that's what
Is more a certification work or he's planning to do an exchange?
he's planning to make an exchange because one of the investors I got together because I also have started like Angel Base started long time ago. I've also got some friends together and we've just done an investment together with him.
Okay.
So one of the investors is looking to invest into making his own market. So they are making
Okay.
their own market there. So that's what his interest was. So I said, why not? I'll align with you. I'll also invest in this person. And
Okay. Oh, okay. Okay.
so he is working towards it and
Oh, okay.
he will be executing it. And I think the world will change for India for a lot, and a lot of nascent capital is going to be in the market very soon for carbon credits because everyone because supply side is easy. In
Yes.
India, the supply side is so easy.
Supply side is easy. Yeah, it's
The
very
demand
easy.
side is what we are building with him. So I am also in service agreement with him. So I said that okay, I'll just work with you and I'll help you out with the buyer side of things. So we are working on it. He's working on his own, and I'm also helping him.
Okay. Great.
Those kind of things. So these are two investments I've done. The thesis is I'm also very cautious in that because I was a traditional investor earlier, and real estate is something that comes in my family to be understood very easily.
Okay.
So we have three co-working spaces in Delhi NCR. So I built that brand, and we reached the point where now we are three in Delhi NCR. We
Okay.
built one in Punjab, so that is the fourth one. And apart from that, we are this ImpactX platform, which is actually what was lacking in the startups that I could not get in co-working spaces. One more reason for it was that I get them online and then get them to back to the startups to motivate them and get them mode where my community becomes the best community anyone can join. Right?
Oh, good. Yeah.
That's the virtuous circle I'm trying to create through these podcasts as well.
In fact, my wife also does a lot of. She's a journalist by training. She's been working in large media houses for last 20 odd years. Currently, she writes for Business Standard and a few other medias. And she's also started podcasts,
Right.
podcast of her own. But her specialization over the last 25 years has been real estate. In fact, she's done. If you get a chance, look at Namrata Kohli. She's quite well known in the sector. She's knows almost all big developers and regulators and everybody in that field. So
Right.
she said she thought that now the conventional media kind of landscape is changing and everything is digital. So she's kind of trying to build a podcast kind of brand of her own, uh, starting with real estate because she knows that very well. She's been doing it for 20 odd years and eventually moving into lifestyle related stuff.
Amazing, amazing. So my podcast is majorly a boring podcast we start with. So I tell them already that this will be a boring podcast. It will not be the Raj Shamanis of the world.
Same with her.
A
She's
lot
very,
of
very
hype happening in there.
technical.
I can't do that because in the end, the aim of our podcast is to actually motivate people in a subtle way. I think silence and peace creates more wealth than
I would definitely agree.
so a little bit of peaceful conversation where we are having this one-on-one, right? Normal conversation is something that creates value over a period of time. Money is not the main aim, but over a period of time, as the content is valuable for people, if it goes,
You can monetize it.
certification for it, right? That okay, is you started earning out of it. The people we've interviewed, I'll give you some understanding. So most of them, so three of them, I think three of them have gone to Shark Tank. Then two of them are really amazing impact startups, which have, for example, one is Green Pod Labs. I always celebrate him. I've been unable to invest in him because the day I was ready to invest, he was too big for me.
Acha.
So he is a solution. He's made a solution which is basically he's a scientist by profession. So he's a organic. He's made a pouch of 1 rupee in India. Okay. This 1 rupee pouch is a powder of organic chemicals, organic things, leaves and everything, and the herbal powder. And he has changed the whole pharma market in India. He has actually one pouch of 1 rupee has changed everything. What has happened with him is he is right now in a mode where uh, if you so there is a problem in the farmers market. What he addressed, which was that whenever a middleman comes in and buys their produce, right? So he says, I'll pay 60% for the 100% produce that you're giving because 40% will get lost in the middle.
Get lost in the
In transit.
Yes.
So he said, take this pouch of 1 rupee, put it in your one packet or whatever you are putting as thing, and this pouch will make your same produce to stay 14 days more as fresh. So we changed the whole logistic. Now the farmer started asking, I'll want 100 for 100.
Oh,
right? Which has changed. The
yeah.
40% increment has happened without anything much. They're just spending 1 rupee per peti, right?
Yes,
One
yes.
box, right? And multiply it to the number, he's just spending around 1,000 rupees max, right? Just
And
imagine
getting
what
full value
change
for
is happening.
rupees. Yeah.
What change is happening. And he has gone to World Economic Forum, presented there. Now it's too fast to go everywhere. So his startup might go
Called what? Deep pot.
Green Pod Lab.
Say,
You
Deep
should
pot
with
labs.
you
I
should
should get it, yeah?
I will connect with him.
Should.
If you want me to
Sure.
connect with him, he knows me.
Sure.
So I'll get you connected with Deepak.
Okay.
Right. So that way you'll know the founder. The founder will be able to talk to you directly. He's also raising right now, but he's amazing.
Okay.
His raise is not pre-seed, so seed. So I'm introducing if you want to.
Okay. Sure.
Yeah.
I will. I will have a look in and come
Yeah,
back.
you'll love his numbers also. You'll love the way he drives himself. The interview that we've done on our podcast, you can go and see. So
Okay.
he was there then also down to earth. He's now also down to earth. So he works
Mhm.
amazingly. So that product I love. Then apart from that, we've done some ecosystems of startups which are trying to make startups come from -1 to 0. Then we've done an AI startup which is actually looking at the problem of when you send a data in an enterprise in the scenario to someone, anything from a PDF or something, right? How do you know that this data will not be given by that person to somebody else?
Okay.
Right. So to protect the whole distribution of data, wherever you want that control, it just happens
Mhm.
through the app that you integrated with your enterprise software. And it just, or data security is not majorly a hacker problem. It is more of people problem as also.
Okay.
He's doing a good job there as well. Right. So
Oh,
that
okay.
is one more thing. Right. And there are Jaipur Watch Company was obviously on our podcast. So you can see all the podcasts if you like someone you want to know more about.
Sure.
You can always let
I will
introduce
have a.
by me,
Yeah, yeah.
right? And they can be a part of your cohorts if you're calling them. Maybe you can have a conversation, get them to your course, and do a
Sure.
brief lecture. They'll be
So that I will love to do. Yeah, that also will love to do with
yeah.
the students. I think they'll get motivated about kind of
Yeah.
learning about actually from the real life investors or real life kind of startup
Yeah, and
guys who
what we are
come in.
getting on the platform are not people who are the consumer side of things. So we are not D2C. We are majorly B2B kind of impact or farmer agri-tech or health tech. So there is one lady who is doing health tech who where she has with your AI that she's built in her app, you can measure your dermatologist. She has actually integrated with all the dermatologists with a physical device and a app, and she's
Okay.
got large number of dermatologists connected to her technology right now, and she's growing day by day. So she's raising right now her angel fund. So I'll be happy to introduce there as well
Sure.
if you are looking at it. So just look at my podcast once. You if
I
you
will.
like
I will
something,
do.
I would love to
I will.
get
Sure.
them at your platform as well, right? So it's a win-win for both of us. So what happens for me? I just need from you is a little shout out for ImpactX. ImpactX that
Mhm.
you got this referral from there, nothing else to it.
No, no, definitely. No, no.
We are trying to
Yes.
build it pro bono.
No, 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 definitely agree. And I think I was just telling this thing to one of my students about an hour ago. That um, uh, not only in kind of life, but in corporate life, otherwise also, networking is very, very important. And you don't do networking with the aim of getting something out. Yeah,
Correct.
you just do connect with people whom you find interesting, and something or the other, you never know what clicks. Yeah, what happens, whatever
Yeah,
clicks,
yeah.
you just kind of pass it around. You just kind of meet with people whom you find
और एक
interesting.
सिंपल
They're
सी
doing
थिंकिंग है ना
interesting
सर,
work.
एक सिंपल सी
Yeah.
थिंकिंग है ना सर ये वाली कि अगर आप
हम्म,
कोई एजेंडा लेके किसी के बारे में प्लान करके कुछ करते हो वो कभी होता नहीं है.
कभी होता नहीं है.
So,
हाँ, कभी होता नहीं.
be unplanned, just be the
Yes.
switch that is visible to a lot of people in the moment.
Yes.
You can have a chat. If you make a mistake, that's a good thing.
It's a good thing. Yeah, always,
Yeah,
always. Yeah,
yeah.
always connect with good people, people who are trying to do something new, something interesting. Learn from them, and if you can help them, why not? For sure.
Yes. So, however, you're looking at introductions to these larger startups, what I'll do is I'll on LinkedIn just connect you with Deepak Rajmohan. So that will be a formal conversation between you and him. So I am done for, and I've given you that hello.
Sure,
Apart
sure.
from that, everything else is however you want us to be a part of anything that you're looking at from business side of things, right?
Yeah.
You could look at some execution. So basically, I am bootstrapped as a startup. I was always bootstrapped, and I would love to be bootstrapped because obviously, in the end, apart from REIT, there is nothing else that understands us, right? We are real estate people, and real estate with startup understanding can't move because they say you have a lot of fixed assets. Sorry, please get out of this conversation.
Yes, 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 yes.
So that kind of things are there. So we are the old school business, which is okay. We are always profitable. We are okay with doing with everything. It's a stable way of looking at that. But obviously, growth is slow. And
Understand, yeah.
but yes, we are able to. But being a bootstrap, making a brand out of it, has something been a journey for me in the last 9 years as well.
Sure.
So that's something that I am very happy to know that we have crossed the 10 mark. So the 10 years of a startup, and then we are still showing growth numbers.
It's
That's
very good. Mm.
a good
Yeah,
thing.
really good. Yeah, really.
So wo hai, so if you want to ever ask me for anyone for your classrooms or you want to get introduced to anyone, I'm always up for it. So
I
please.
surely would love to. I think again my way of and maybe again your way of giving back to the younger generation. How and you never know who may turn out to be the next Zomato in the making. You never know. Yeah.
We are trying to find them, and I have
Yes.
high hopes with the people I'm finding. So I'm very positive these days. It has happened recently. Earlier, I used to never find. So last 2 years has been something of a bigger visibility of things,
Sure.
good visibility. Earlier, I used to find a lot of startups, but not much who are actually having the gall to build something which is actually valuable. Are looking for patient capital, not for anything that is quick.
Yeah.
Investor driven businesses doing nothing.
Sure.
Those kind of things were a lot visible earlier.
Yeah.
Now
No, I think
people,
the
yeah.
cycle changes. I think because once you start to see that lesser money is available in
Mm.
terms of throwing around, I think you'll always get valuable companies to build.
Right,
Actually.
right. So this is my journey of doing things. I will introduce you to one. You let me know
Mhm.
anyone else you want to get introduced to.
Sure.
Apart from that, pleasure to know that you have been involved with a traditional business and gone into Angel Bay. So one more question I have about Angel Bay, right? So Angel Bay, how do you choose your investors? So how does Angel Bay choose investors to onboard?
So I think it started mostly with referrals. So most of the founder of Angel Bay is a senior of mine from IIM Calcutta,
Right.
and we also worked together in the hedge fund where I worked. So when he decided to start something of his own,
Hmm.
so easy to because I know him, I trust him, I know him for the last 20 odd years. So easier for us to kind of put money there. Yeah.
Hmm.
So most of the early investors in the Angel Bay are all friends, family, colleagues, or alumni from the same college or
This is based out of.
whether I did it.
So this is based out of.
Yes, Gurgaon. Yeah, based out of Gurgaon. Yeah, based out.
Right. And what is it structured like? Is it a how is it? Is it a not for profit or is it?
No, it is a profit. It is a profit making.
It's a
It is a
private
profit
limited firm.
making. Yeah, private limited firm. And they invest in like any other. It's like an investment fund,
Right. A special purpose vehicle for investment
special purpose vehicle for investments.
and a private limited firm. Right. So I'm trying to structure this as a not for profit. So I was thinking maybe
Okay.
a not-for-profit way of building an ecosystem and then getting discovery happen and then put money into it.
Hmm.
That is my initial thought. Maybe this will fail, but at this moment,
No, I don't think why should it. I think yeah, maybe I think once you not for profit does not mean that you don't have to earn thing. You have to run the business. But yeah, okay, maybe not do it for kind of your own wealth creation in itself.
The main thing is when you're doing a not for profit, the effort is into creating the ecosystem,
Yes. Yes.
right?
Yes.
Which then becomes cost to the unit costing that you were talking about, right? So that is something that I was thinking maybe that is a cost which will be an energy and time cost, which I don't want to go into in the beginning. What should I do that way? Or yeah. So I was thinking private limited will be a special purpose vehicle will be a greater, amazing way of doing it.
Yeah, I think it is better do it in a firm rather than like an NGO or not for profit. You can always have that even with a firm. You can have an objective that okay, you will make some amount of money to run your venture, but not do it for purely profit as a
Correct.
theme.
Correct. Correct.
If it comes, why not? There's no harm in it, but not as a sole purpose of earning only money. It's more developing the ecosystem.
So to close this amazing conversation, but definitely I will be connecting with you for life.
Not the same here.
The only feeling I just got.
No, same here. No, really, really nice talking to you. And I'm sure we'll be touching.
Last question. So last question is for the audience. So you have had a lot of experience. You have the years to you, and you have looked at a number of things from traditional investing to angel investing to traditional business building to hedge fund management. So what is your thoughts on what do you want to talk to other startups and businesses that you teach in your organization, in your new college, the university that you work in, or anyone who's a startup who's building at the pre-seed and seed level? What would you like them to hear out from you?
I think two things that kind of stand out for me, not only from a business standpoint, but from a life in general perspective. One is have patience. I think patience is very, very underrated nowadays.
Yes.
People don't realize that you have 50 years. So if I am a 20-year kid, I have 50 years of working life ahead of me. Yeah. I can't or couldn't or not everybody can build everything in 2 years. Yeah. It takes a lot of time. Most of the time, people see only the success. They don't see the pain and the effort that goes behind it. So patience is very, very important. Second, I think is, and that I do it in my everyday life is I am always a learner. So I never claim that I know this or I know that or I know everything. I always learn. I read a lot. I still read maybe a book every week if I can, probably now maybe 15 days. So I am willing to learn from anybody. I think that's very, very important for people to be successful. If I maybe can say if I am even mildly successful, I think that is very, very important. So those two things are very, very important for people in life in general, but for even for startup guys.
So what are you reading currently?
So currently, I am reading about this book called Bottle of Lies. So how Ranbaxy did a lot of kind of hanky panky stuff when they were building their business. So now, but you should know also these kind of things which happen in the real world. So you should be aware of what is happening.
Yes. So pleasure to have you, Manuji. And
No, it's been a pleasure, Arjun.
have you.
And a pleasure to connect with you and have a chat. And thanks for inviting me to kind of share my world views of the last whatever 25, 30 years
Amazing.
experience.
Amazing to have
Thanks
you.
a lot.
Thank
No, thanks a lot. Take care, and we'll be in touch for sure. Thank you.
Yes. Bye.
Bye.
You've been listening to Impactech Studio podcasts. Manu Kohli's journey shows that real success isn't just about building wealth, it's about building understanding, perspective, and the ability to give back. From corporate leadership to teaching and investing, his story highlights the power of fundamentals, patience, and long term thinking. If this conversation added value for you, subscribe on Spotify and YouTube. Share it with your network and stay tuned for more conversations with leaders creating impact through experience. Until next time, keep building with purpose.